Hey folks, welcome back. Today is Wednesday, February 5th, 2025. It's going to be a really short Forex and NASDAQ review. Before we get into it, just note that it's important that you watch the February 4th, 2025 market review. So I covered some things, and some of these levels that you're going to look at here, I'm taking a great deal of liberty in thinking that you have these already noted on your chart because you watched the market review from last night. So if you have not done that, if you have not watched that video, it's better if you watch that one first. Then the levels here that I'm showing you won't look like hindsight, okay? All right, so here's the dollar index. Left-hand side, we have a daily chart. And I mentioned we were looking for this buy side balance, sell side efficiency to eventually behave basically as a inversion fair value gap. It doesn't have to do it, but that's what I'm looking for. And then move below this short-term low here where there's minor sell side liquidity. And if it were to come back up and engage this range over here as an inversion fair value gap, we could eventually see it trade down and take out that low there. Well, the market did in fact trade lower today, but it didn't go outside of the low of that expected inversion fair value gap. Here we have the fifth breaking down, going to consequent encroachment of this range here. Now, this is not based on the daily chart. Remember, watch the video from last night because this range is anchored on a weekly time frame. That's why you don't see it anchored to the right candlestick wicks. Okay, it's not a mess up. It's just that we moved from we moved from a higher time frame weekly down to a lower time frame daily. You can see the bodies respecting the consequent encroachment of that range and close near the high of it. 15-minute time frame, you can see we used sell side imbalance, buy side inefficiency here, breaking the low, coming back up, and just basically working inside the upper half of an inversion fair value gap. Eventually, we want to see it trade down to the low of it and outside of it, and then have no willingness to want to get up in this area here, but stay at the consequent encroachment level and lower. And if it displaces from that point lower, the very first lower time frame fair value gap that can be shorted, that's how I look at using inversion fair value gaps. If I'm very, very convicted about how I believe a market may go higher or lower, then I will trade right in the highs of a inversion fair value gap that has yet to prove itself. That takes a little bit more experience, but that's eventually something you might gravitate to in your experience. 5-minute chart on dollar index, much of the same thing here, just banging back and forth in the upper half of the inversion fair value gap. All right, we're looking at a euro dollar chart, 15-minute time frame on the left-hand side. And pound dollar was able to hit our target first, which was a buy side liquidity pool. And then euro dollar was a little bit of a laggard. And you can look at the relative strength analysis concept I taught in mentorship, and you'll see the reason why cable was the upside leader, which is the only reason why I told the other day in the Telegram channel what the draw on liquidity would be for cable. I wasn't interested in euro dollar, not that it couldn't go up, because it usually will trade in sympathy and move, in tandem. Whatever cable is doing or pound dollar is doing in a symmetrical market, meaning the dollar should be going down, cable going up, or pound dollar going up, euro dollar should go up. Okay, but I was interested in cable because it was likely to perform on the upside better than euro dollar, and it did in terms of delivery by time. But eventually, euro dollar gave up the ghost and traded in sympathy with what pound dollar did, meaning that it went to its buy side liquidity pool. You'll know what this is if you watch the video from last night, okay, on February 4th, 2025 market review. All right, so we have a order block here, rallies higher, comes back down, reacts, another order block here, same here, hits it, trades up, falls short of the buy side liquidity pool, comes down one more time, hits it, and then punches through that. If you're in a Telegram channel, I alerted you guys that happened, and I told you that was basically the completion of my week with the trading community. I had no intentions of doing anything extra for the week, but we'll get to that in a moment. In the 5-minute chart here, you can see all of the order blocks in here. You can see them reacting off of the 5-minute chart. Now, I want you to think about how this price action looks. Lots of whipsawing back and forth and overlapping previous ranges a lot. That is a high resistance liquidity run condition, meaning that your stop losses have to be very generous. You can't be trying to trade with a 1 pip, half a pip. Some of these guys that sell mentorships try to tell you they do. The likelihood of you staying in the market with a very, very tight, ultra small stop loss in the present climate is highly unlikely. Okay, there's trade wars underway. Companies are, saber rattling with tariffs and whatnot. It's going to cause the markets and the commodities and interest rate driven markets and currencies to go all over the place, which will roll over into equities markets. Looking at the 5-minute chart, you can really see the exaggeration of it's like a fuzzy chart. And for you folks that are foreign, you probably don't understand what I'm saying, but it's not real crisp. Okay. The inefficiencies aren't crisp and they don't stop on a dime. They overshoot them a little bit. That's a characteristic of a high resistance liquidity run. And they can be traded, but it requires you to hold on to the positions with a little bit larger stop loss, less leverage, and be a lot more patient. And true to form, it hit our buy side liquidity pool, and that was the second expectation for Forex. So pound dollar hit our target, euro dollar hit our target. Dollar did not go below the potential inversion fair value gap because both euro dollar and cable or pound dollar have both met my weekly objective by hitting those buy side liquidity pools. I'm personally no longer interested in it. So I don't care if the dollar index does what I was expecting to do. It was used as a catalyst, as a 3 market triad, where I'm not just simply looking at the euro dollar and thinking, am I bullish or bearish? That's not good enough. You have to look at a closely correlated market like the pound dollar, and if it's bullish and you're trying to trade euro dollar bullish, wonderful. Then you should be able to confirm that one step further by seeing a bearish dollar. So there's always these extra steps when trading Forex, which again, it's more advantageous for you to trade futures because it's pretty much straightforward. You're looking at one market. You really don't have to look at anything else except for the index. See, it's it. But I understand there's a lot, most of you, as my students, are Forex traders. I'm just reminding you that you just can't simply look at one pair that you're going to trade and think that you have a full grasp on all the considerations that's going to have an impact on the delivery of price in that currency pair. All right, real quick, we're going into pound dollar. Left-hand side is a 15-minute time frame. You can see here we had order block here on a 15-minute time frame. Buy side balance, sell side efficiency, fair value gap. Hits that. That's a really good setup in and of itself. Rallies higher, another buy side balance, sell side efficiency, consequent encroachment, leaves part of that open like that. That's going to be strength if it can rally out, and it does. And runs up into, one more time, immediate rebounds, and then sends it above our buy side liquidity pool. Again, look at last night's February 4th, 2025 market review, and you'll see these levels and why they're pertinent. And then ultimately the market folded and went back into the previous range. On a 5-minute chart, you can see all those 15-minute time frame order blocks and fair value gaps being utilized here. Okay, and you want to study and take screenshots of all of your markets that you're trading. Do this with a 5-minute chart, 15-minute time frame, 60-minute, and or if you want to do like swing trading, you can do it with the 4-hour chart too, but certainly with a daily and a weekly. And that's why it's important to have one market that you're really specializing in. If you're trading Forex, you're going to have to do a closely correlated market like euro dollar, pound dollar, and dollar index. So it's a little bit more involved, but if you've gone through my mentorship videos, it's on this YouTube channel, you'll know that I pretty much covered it. It's like a PhD level for trading foreign currency. All right, running right into E-mini NASDAQ March delivery contract. 15-minute time frame on the left-hand side. I counseled you in the Telegram channel yesterday to draw your February 4th, which is Tuesday's first presented fair value gap, extend that to the right, okay? And the market traded lower down into it here. And look how it delivered. Where were the bodies at in the upper half? Did it even close on the consequent approach on the midpoint of it? No. It did wick outside of it, but that's permissible. That means we allow that to happen. This is indicating that it's likely to go higher. So the market rallies back higher. And look at all of these wicks on both sides of the marketplace. You see that? That right there is high resistance liquidity run conditions. That means you're likely to get stopped out. I got stopped out, but I did an execution, and I'm going to cover what I was doing and also answer. There's a handful of folks out there, and let me just say this, folks, and please do not write in the comment section like I need someone to pat me on the back and encourage me, because I'm not bothered by these types of individuals. But I want you to understand what I'm going to show you tonight, because this will literally shut down all the other arguments, okay, about the things I'm teaching and what I'm telling you what they're based on. There are people out there saying that obviously there's no algorithm, there's no central algorithm, there's no this, there's no that, okay? Whether they made money or not is irrelevant, because they have absolutely no understanding about what it is I'm sharing, what I'm proving by execution, and also with the logic, okay? I don't care if, Timbuktu from Backwoods Johnny's, been in the crick has made money and he's been doing this and she's been doing that. I could care less about all that. Everybody has an opinion, okay? Everyone has an opinion about what the markets go by, how they use, buy side, sell side, buying pressure, selling pressure, support, resistance. Everybody has an opinion, okay? I'm not here to try to convince new people. I'm here talking to the collective that has already arrived at the understanding that these markets are completely rigged, they're 100% manipulated, and delivered on a time-based delivery mechanism. That means it's an algorithm, it's scripted. Everything is scripted, okay? So for the folks that say that, for instance, I revealed what a IMP24 is. It is the actual logic that's used to frame a daily range in any market, okay? Now, it's one thing for me to say it and then show a pre-recorded video where it's been said by a handful of people again, and it catches momentum because these individuals keep putting it out there saying this is what he's doing. Talking about me, he's doing this. He's using multiple computers. He's hiding his losing trades. He's doing multiple things and he's deleting the things he says wrong. And you're only seeing the times he does it right. So I saw some messages come to me, and they're asking what my opinion is, or am I going to answer these people that are saying this and saying that? Okay. So I was initially done for the week. I didn't want to do anything else. So I was like, okay, well, just watch what I do with the NASDAQ today. And I thought to myself, I was like, how can I cancel any argument about it only being one narrative that I'm going to deliver today? I'm only going to be looking at one direction in the marketplace. I'm only going to be looking at a specific discount level, and I'm going to be looking for a scenario that takes price higher using what I've already taught. Okay. But an IMP24 on a day like today is what I framed. Now, how can you, if you say you were going to do something like this, say you wanted to go out into the public and prove something, like it's not a magic trick. I'm not performing sleight of hand here. I know how to do sleight of hand, but I'm certainly not doing it here. You're you're listening to people sometimes on the internet that are wrestling with this idea that there's no way one person, and let alone all of us, that can see what these markets are doing algorithmically and find consistency, find continuity, find a profitability that is unmatched with precision. See, it's hard for the individuals that don't train with me and haven't seen this for years. You're getting a taste in that Telegram channel what it was like for mentorship students for 6 years, every single day. Every single day. That's the reason why you never saw anybody come out and say, "He's not really doing it. He's wrong a lot." Okay? So, and I know this is probably boring some of you. Some of you just want to get right to the point. Well, the point is this. I'm trying to prove that there's no way to escape what I did today. There's no way to escape it. So I thought to myself, it's like, if I post something on X, invariably someone's going to say, well, he posted something else and he just deleted it. And somebody that comes to the YouTube channel or finds out about what it is I'm teaching, and they listen to some of these yahoos and they'll say, well, he's doing this, he's a fraud, he's a scammer, he doesn't do this, he doesn't do that. I've never faked my P&L. I did a meme joke against someone else who I knew was doing those types of things. So everything you see that's being said about that three-letter person I portrayed on the internet is largely false. Okay. So I wanted to prove that the things I claim I can do using the things I'm teaching, how can I prove it to you? How can I prove that logic exists? Well, I can't simply just post what I think is going to happen on Twitter. I simply can't just go into Telegram because I could delete something there. So, how can I do it in a manner where it can't be changed, it can't be edited, and it's in multiple forms of witness? That means I'm going to pick a student of mine that live streams. Just so happens to be Tanya Trades. So, I went into her live stream this morning and I posted the IMP24 logic that was going to be used today for NASDAQ's daily range. I can't edit anything that's posted into a live chat in a stream. You can't do it and I can't do it. The best you can do is delete, right? So there was a couple thousand people that saw her stream, and you can see the time in her live stream around 9:34 or something like that. She's in the same time zone as I am. She's in New York. I'm in the state of Maryland. So we're on the East Coast of the United States. So we share the same time zone. So the things I'm posting, you can verify the time I'm posting it while watching her live stream. Now there's a little bit of a delay. There's always some measure of a delay when you're live streaming on YouTube. But the point is that I stated that I wanted to see 21,508 sell side hit first. Then I said I like 21,615. And then the highs around 3 p.m. on Tuesday. Okay, so what does that sound like? Can that be argued? Is there ambiguity there? Was I in any way ambiguous about what I wanted to see happen first? The market needs to go down first. To what level? 21,508. Then go higher. Why? Because the values I said I liked was 21,615. I even told Trades by Matt in a text that's what I was looking for too. Okay, so I got two witnesses there, but that wasn't going to be good enough. I needed to say it in her live stream, and I wanted people to see it there and not have a plethora of laptop computers and recording multiple setups and multiple examples of this, that, and the other thing. I can only do it one time. And I have to stick to the logic I put out in someone else's live stream. I don't tell Tanya what trades to get into. Okay, I don't do that. But I did make the idea of what I'm going to be implementing for my trade that you saw. I did a recording of it, I did an execution, and I'm going to explain to you in great detail tonight how I did it. Okay? So that way I performed the function of calling it in advance. I ordered the price action to behave a certain way. And if it did that, I will engage price action. I stuck with the idea based on the things I'm going to teach tonight. Now, in the Telegram channel, I told the members, and if you're brand new and you just signed up and you're in there, go through the audio clips and you'll hear me talk about taking Tuesday's first percent of fair value gap, which is this pink area down here, to extend it to the right. And it was likely going to draw down into it. And it happened this morning at 5 a.m. Eastern time. And you can see that over here on the 5-minute chart. So the London setup was this sell sign and bounce, buy sign and efficiency. Market trades up into it there. This little wick is okay. During the London open kill zone, breaks lower. This sell sign and bounce, buy sign efficiency is going to act as an inversion fair value gap. So we want to see it stay in the lower half, which is what we're seeing here. And look at the bodies. It's not even willing to get up in there. So is that indicating strength or weakness? Weakness. So the market does what? It drives lower, takes out that low, and trades right into Tuesday's first percent of fair value gap. Find that in Wyckoff. It's not there. So we're looking at a 1-minute chart now. Now here's where you want to stop everything around you. If your wife's talking to you, pleasantly ask her, honey, can I have a couple minutes to myself for a moment? Or if you're fearful, don't say that at all. Pause the video and come back when she's asleep or elsewhere. Married men, you know what I'm talking about here. So this is the part you want to pay attention to, basically. Because if you've been lost in the dialogue that has been given you for the last couple minutes, shake yourself, okay? Really, really, really pay attention to this part. Because this is the part that proves authorship. This is the part that proves foresight. And it's not leaning on any other person's logic or school of thought. Okay, I promise you, this starts and ends with me. Okay, so 1-minute chart on Nasdaq March delivery contract 2025. It's a 1-minute chart, and we're showing it in regular trading hours. Okay, RTH. When you put your chart on RTH, what it's going to do is if there's a discrepancy between the previous day's settlement price and the 9:30 opening price Eastern time, you'll see it in the form of a gap like it did here. Okay? So if we open lower than the previous day's settlement in RTH or regular trading hours, that is called a discount opening range gap. Opening range gap high when it opens lower at 9:30. The opening price at 9:30 is the opening range gap low. Notice this low over here? That's not what you see in my recording, but it's based on the logic that we had already opened up at that low and went lower. Traded up into the gap a little bit, one more time, but did not completely close it in. The market drops from there, takes out that short-term low, and causes individuals to see this as a continuation pattern known as a bear flag. Now, I'm saying that here, and you're saying to yourself, if you're a brand new viewer, it's easy to say this stuff in hindsight. But I'm going to counsel you to go back and watch the recording where I'm typing it out in not Telegram, but in TradingView's platform. Okay, you can see me typing it out, and I say at a very specific moment that now retail traders see this as a bear flag. And I also state when it trades down and validates that bear flag, I say at this moment, retail traders now trapped, and then the market's going to go higher, and it's going to have a big reversal to the upside. All these components with this sell side being taken here, the fact that we had a discount opening range gap, that means it's likely to see the market trade up mid gap. But what happens if we have relative equal highs above the marketplace and we're part of a market that's bullish too? Well, that means that we're likely to see not only just the gap closure between 9:30's opening and the previous settlement price it may go through that gap closure and keep going higher. So here is our opening range gap, and you can drop a fib when it's a discount opening range gap. That means we open lower than previous day's settlement there. So here we have lower opening. You draw your fib from that closing price to the opening price. And there's your quadrant levels, okay? Look at the sensitivity, how every one of these candlesticks, they stop and they turn, they hug that level here at consequent encroachment. We come back down one more time. Look at the bodies. They're not even respecting that level here. The wicks get down to it and through it, but the bodies are saying, no, it's about time to start rallying. I got stopped out by railing up my stop loss real tight because I wanted to go on to Twitter. I wanted to see the buzz of what I just did in Tanya's live stream, because it's word travels fast on social media, especially if you have a 3-letter name like mine, and everybody likes to take shots at it, and it's fine. But today, you caught some smoke. So the point is this: the market trades down and then picks up the discount inside this balanced price range. What makes this a balanced price range? Single down closed candle is a SIBI. Single up closed candle is a BISI. So the market's not likely to go past this. It can trade into it, but it's not likely to go over top of this and go lower. We're seeing it do it here, and it starts to rally up. One more time, touches the high of the opening range gap, and it rallies up and trades into a higher premium level that I even called for today. So with that logic, we're going to take a look over here. Now we're in electronic trading hours right here in the lower right-hand corner. Relative equal highs here. And this is more or less the 4 p.m. high, but I just real quickly looked at it down here when I was given guidance in the video that this is what I was basically aiming at. So technically that's actually a 4 o'clock high, but you can see right below it, I got 53-year-old eyes, folks. Okay, sometimes it's going to make itself known in what I'm doing live. I'm not as quick as I used to be. I got that grandpa syndrome coming on. So here's Tuesday's first presented fair value gap and extended over. The market hits that and then rallies up. Now, find that in supply and demand. Find that in Wyckoff. Find that in Elliott Wave. Find that in anything else. You're not going to find that. You're not going to find it. Okay, I promise you it's not going to happen. And how is it that I'm always sharing in a Telegram? And if I go on other people's live streams that are students of mine, I'll point out the very specific PD arrays that's going to be used by the algorithm. How am I getting them right? It can't be cherry picked then. It can't be cherry picked. It can't be hindsight, only winners shown. It's me using the logic that I have poured myself into on this YouTube channel. All you have to do is spend time studying this stuff, but you think you're going to learn it right away, and that's not going to happen. That's why I said my coursework, learning under me, the tutelage I put you through, it's the most expensive. Even though I'm not charging you anything now, it's the most expensive because you have to put down everything you think you believe the market operates on. The buying and selling pressure myth, it doesn't work. It doesn't hold up. You're not going to see the understanding that's necessary for you to trade with this level of precision if you're holding on to retail archaic logic. It's a red herring. It's meant to have you believe something that's not true. And they tell you to accept less than precision, to accept the fact that you're going to get it wrong a lot. Because why wouldn't you get it wrong? Why wouldn't you? It's human nature for you to get it wrong a lot. Okay. And I want you to contrast that. Listen, folks, I had 2 guys come into me in my comment section, and they're saying, you brag too much. You're just like the trolls. I'm not bragging. I'm speaking facts. I know how to brag, and I'm not. I'm having a conversation with you in the most civil manner I can, and I'm trying to be sensitive to the people that have very, very, let's put it this way, they have their feathers ruffled very quickly and easily, and I'm trying to be delicate with them because I want you to learn. That's all, and that's why I'm here. I'm showing you these things to prove to you there is something going on besides retail patterns, buying and selling pressure, depth of market, ladders, level 2 data, all those heat maps, liquidity maps, all that stuff. They're all gimmicks. They're meant to make you think you have an edge, you have a secret weapon. None of that stuff matters. I know where the orders are before those things start sharing it with you. And I want you to look at what I do in that Telegram channel. I want you to look at what I did today and find a way where I could have done it and not have done it truthfully. Show how I can fake that today. I promise you, you're going to end up very frustrated. And it's an open challenge. Tell me how I did it. How did I fake it? It's not possible because I put it out there in a manner where I can't change it. I can't manipulate the perspective that what I said is what it is. And I have to only engage based on that. So with all that said, we have the relative equal highs up here where there's the buy side. And then we have the opening range gap high, which is previous day's regular trading hours settlement price. I have video work on that. So if you're looking at the opening range gap, there's a lecture on this YouTube channel for free. You can study it. There's a little bit more detail. So it tells you the times and whatnot. So we opened up, did all this back and forth price action in here, and then eventually traded higher and then ripped even higher into that buy side. But notice that during the London session ending at 5 a.m., that's when we get this first presented fair value gap from Tuesday. Now, if there's an algorithm, okay, if there's an algorithm that's a very specific price engine that causes price to go to certain price levels, not because of sellers, not because of a lack of buyers, the market keeps offering lower prices as it gets to these levels here. But it's never a straight line. It's going to go back and forth, back and forth, back and forth. But the ultimate goal is it's going to get into that right there. Like I said in the Telegram channel, don't take my word for it. Go back and listen to them. I promise you, there's almost 70,000 people in it right now. And if any one of these messages ever get deleted, they're going to scream to the internet police and say, hey, look at this guy. He's deleting things. You're welcome to take screenshots every day that we can see every timestamp. And you'll see nothing ever gets changed. I don't edit anything. I can't edit anything. It's an audio clip. It's real quick. It's easy. And you all hear it as it comes out of my mouth. Okay. So we have a nice turning point here. That's the low of the day. And the market rallies up into a draw on liquidity here. But let's get some detail. Let's pull back the veil on market wizardry, if you will. Let me show you something in here that no one else is going to be able to teach you, okay? Can I do that? Can you suspend your disbelief in me and your prejudice? Okay. Put down your pitchforks and your torches for a moment, okay? I promise you can pick them back up if you're not impressed by this. But just let's walk down this road here for a little bit and have a conversation. Because if you listen to me, I promise this is going to help you. Whether you like me or not, I trust that what this is going to show is going to give you something that is going to build in your understanding of how price delivers. All right, so we have price zoomed in. We have the opening range gap that's shown here. And then look right here. See these relative equal lows? Now, it may not have been obvious to you when you were watching price this morning. But if you listen to what I shared in the 2024 mentorship on my YouTube channel for free, I taught how to look in pre-market for these areas like this. If you have a bias, if you have a draw on liquidity, which in this case is 21,694, which is the relative equal highs from the previous day, it's likely to continue going higher on the daily chart. And then we have this obvious pool of liquidity where there's relative equal highs. So that's a smooth area. And the market tends to make that jagged. Smooth edges become jagged or are made jagged. That was the little catchphrase I came up with in 2024. Well, the same thing's here. These are smooth edges, relative equal lows. So the market's going to do what? It's most likely going to go down here and disrupt that smoothness, and it does so here. See that? Now, let's go one step further and prove logic that this algorithm uses. Because if you've ever studied higher order math and or science and or algorithmic science, if you've ever worked with an algorithm, you have to have data. You have to have, not only do you have to have logic and syntax, but you have to have data. So what I'm showing you is what data arrays, which is what I call my PD array, premium or discount array. What specific prices, not zones. We're not talking about supply and demand zones, which is a myth. Sounds clever. It's just a twist on support and resistance, but I'm telling you very specific price levels. And I'm cutting through all the other ones that aren't really there. That's what you should be noticing in that Telegram channel. That's what you're about to see here. So if we take price away and we have known price levels now, everything else except for what I'm showing you right here doesn't exist. Okay? If you ever watched the movie The Matrix and Neo sees the little boy bending the spoon with his mind, and he's like, "How'd you do that?" He goes, "Well, you gotta look at it like this. There is no spoon. Okay? Look at it this way. There is no buying and selling pressure." Now think, if I know very specific PD arrays, very specific price elements that the algorithm is going to use, what can I have with that? I have an advantage that you don't have, that everybody else doesn't have. Because everyone else is busy looking for patterns. They're looking for buying and selling pressure. They're looking for DOMs, depth of market, level 2 data. They're looking for trend following indicators. They're looking for the simplest of simple. You can go do that. You can be profitable with good sound money management. I'm not happy with that. I want freakish precision. I want to be able to, if you watch me trade, you're going to be able to say, there ain't nothing like that. And that's what I've wanted. I wanted that all my life. So I'm showing you, I'm pulling back the veil. I'm showing you smart money. Okay. I'm showing you a smart money trader revealing something to you that you would have never known before. Okay. Now, I'm not selling this, but I've proven it already today. And I'm showing you right now how I did it. We have the draw on liquidity, which is how I taught for the last few years and in my paid mentorship, which I don't have anymore. I won't do it anymore. And it's all uploaded on my YouTube channel. And the videos that are commentary, they're all coming too. That draw on liquidity is indicating the market's like to draw up there. Okay, so you can build a bias that it's going to be bullish. The next price that's static is at 9:30. Whatever that price is at 9:30, it cannot change. So we wait for 9:30 Eastern time. So that is your opening price at 9:30, and that is your regular trading hour reference point. And then you compare that with the previous day's regular trading hour settlement price. You see how they're static, they're constants. Once they're there based on time delivery, all you're going to do is wait for the reference that's useful for it. And in this case, it's the 9:30 opening price. Where are we at in relationship to that previous day's settlement price? Higher or lower? In this case, we opened lower. And we have a draw on liquidity in a potentially bullish market. And we're looking for 21,694 as the upside draw. So we know what? The likelihood is that the daily range is going to go higher. Does it close on the high? We don't need it to do that. But we're looking for reasons to justify an entry to get into this market long. But can we just buy anywhere? No, you have to buy in a discount. Then we have an obvious relative equal low sell side liquidity pool. So now we know there's stops there. We know the opening price at 9:30. We know the previous day's settlement price in regular trading hours. And then we know the draw on liquidity. Nothing else matters yet. So now, because we have these reference points, we can now take a look at it from an algorithmic delivery mechanism. Because we open lower, the likelihood of that gap that's shaded, it can see it do that. There's nothing wrong with that. It can do that. But normally, If you're bullish and you're expecting higher prices, it can do something like this as well. It can open up right at the opening and just go straight right to it, and there's nothing you can do about it. Sometimes you're going to miss moves. I miss moves sometimes like that. I can't be a part of it if it's too fast. But today, I used the IMP24, which is something that I can't teach that part to you, but I can showcase it. I can prove to you in my hands, this is what I know, and nobody else knows it. So it's kind of like me snubbing my nose at the people that say, there is no algorithm and this guy's a fraud. Okay. Explain away this. The market opens at 9:30. I know that it's likely to draw up into that gap, but I don't think it's going to completely close the gap. Why? I'm going to show you. It starts off by going up there. That's why I said I like 21,615, because I was trying to time and pick the very price that it was going to go up to, but not close in the entire range of that gap. Then the market drops, goes after the sell side. Why? Because that first run up in there, people want to see that gap close. A lot of people know gaps need to be closed. Gaps have to be closed. Gaps like to be closed. Not initially. They don't have to do it right away. It can be deferred. So by dropping down there, everyone that bought it trying to get that gap closure, they're getting crushed. And their stop loss that's below the low of the day, or if they're using this area down here as a stop loss location, they're rated. I know that this is going to happen. So I'm going to buy as it does that very thing underneath at 21,508. Then I'm going to expect the market to go up and close the gap. And then if I can still hold on to the move, get that ride up into the buy side liquidity there. Ultimately, this is my power 3. No one else teaches this but me. Now, there's a lot of people that's learned from me, and they have tried to put it in book form, and they sell mentorships, and they don't tell anybody that they learned it from me because they want to sound like they're smart and they're genius and whatever. But you'll never see them do what you watch me do today. And that's why I don't teach everything. There has to be something held back from me. And it's not selfishness. It's the fact that I can point to someone and say, they're a liar. You didn't learn that from a book. You didn't learn it from somebody that doesn't even live anymore. It's come from my work, and that's why I put it out publicly. It's in a format where on YouTube you all can see that I'm the author of all this stuff. Now let's take a look at it in price action. What this is suggesting is I want to be buying at the opening price at 9:30 in regular trading hours or lower in that green box. And then also there's our first percent of fair value gap. Now I rushed in the recording to draw it because markets are moving around, but this is how the gap should look. You got to include that volume imbalance. As it goes below this sell side liquidity pool here, I'm buying it. I'm waiting for it to dive down there and buy that because I know what I just outlined is likely to occur. There are my entries. Notice how they're all grouping below the first presented fair value gap area here. And it's inside there too on a couple of them right at it. Is it right there? That's one there. And it's below that sell side liquidity pool. So every PD array that formed, while it looked like a bear flag a couple different times in here, it's not. I'm buying all that up. And I'm showing every single PD array that was available at the time in the recording. Watch the recording for today, okay? February 5th, 2025, that execution video on NQ. You'll watch me do it live and am executing on it with a very, very small stop loss. Now here's the execution labels where you can see the actual prices. And then it delivers above the opening range gap high. And then I bring the stop loss up here because if it stops me out, that's fine. I can go over to my favorite haunts on YouTube and see what everybody's saying. If I wanted to keep it wide, then I potentially could have got stopped out and gave up more of the open profit. But because the volatility is off the chain right now with all of the tariffs and whatnot, it's better for me just to bring the stop loss up because it's done enough. And then ultimately it did go up to where I said it was going to go. Okay. And also had a midpoint level, which I taught last night in the review, where you have two liquidity pools And if you're bullish, find a halfway point between that, and that's a buy side liquidity pool as well. But again, you're not going to learn that in books and things, but it's going to find its way in Amazon books now because I taught it. So anyway, uh, that's what I did today, and I did it in a manner where it cannot be argued that it was only one explanation, one delivery, one thing happening first, which is the drop down, then rallying up. And it takes a great deal of understanding about what the algorithm is likely to do and what it's not likely to do. Nobody just gets lucky doing this kind of stuff. Okay. Nobody teaches this in other books. Okay. There's no other person out there I can say I learned that from. Okay. I'm being honest with you. And if you don't like that and you just can't believe it, that's okay. Make videos about me. That's okay because it just causes more curiosity. And then when they come here and they join the Telegram channel and they watch me do it live, somebody's a liar and it ain't me. Here is Tanya Trades live stream. And you can see if you zoom in right in here, you can see the time. And this is me saying I like the 21,508 miner sell side first. That means the stop run below. Then 21,615, I like it. And then the relative equal highs at 3 p.m. on Tuesday. There's no way you can twist that around to make it say anything other than just what I just outlined tonight. There's no play on words. There's no word salad there. There's nothing extra. It's just straight to the point. It's got to drop first below 21,508, and then it's going higher. And not just some zone, very specific price levels. So that's it for tonight. And for this week, I will be working on video lectures. So that way you guys can have them in your hot little hands. I don't know at what pace I'm going to have them, but you'll get them throughout the weekend too. So I'll schedule them for release, at 8 o'clock time, Eastern time. Enjoy your weekend. I hope you learned something this week in the Telegram channel. I hope you were inspired. I hope you're encouraged. I hope you get really excited about wanting to learn all this stuff because I have a lot of things I want to share with you this year. Doing it, not just talking about it in hindsight, right? Wink, wink, nudge, nudge. Till I talk to you next time, Lord willing, be safe.